Byron Lotter, it must be a tough call right now when you're looking to the US market for an investment thesis and the local market is running with no stopping of the market rally in sight. How do you hold your own when the tide appears to have turned?
Hi, Bronwyn. Yes, thanks for having me. I guess you've sort of painted the picture of where Vestact stands. You know, we're still 90% offshore US stock market focused. And I think, to be honest, if you're looking at a 10-year time horizon, it should probably stay that way. We have a lot of clients, and probably the majority of your listeners will be South Africa based. They'll have lots of assets here naturally through their homes, holiday houses, their businesses, their income. In my opinion, that's more than enough exposure to South Africa. And I am bullish and very optimistic. And, it's certainly an exciting time. We haven't had positive sentiment like this for a long, long time. And it's great. It's contagious, and it's great to be part of it. But I still think, South Africans who work hard, save hard, your money is better placed in the US stock market specifically. And it's not just about safety or what's going to happen in a South African context. We just feel that the innovation, the excitement, and a lot more upside growth is available in the US.
You're definitely not shy as Vestact for holding your positions and continuing to upweight, even though stocks have run very, very hard. Enter the discussion, the tech stocks in the US, where you can't get enough. Is that still a fair statement?
I think, we've gotten to the point where categorizing stocks as tech stocks might just be a mistake. I mean, is Amazon a tech stock? It's a retailer. Apple's a hardware manufacturer, and they're also a retailer. A lot of these guys are providing cloud services to every single industry out there. So I think, sort of putting yourself in a box like that is a mistake. Having said that, I do think there are some good opportunities in other sectors. Funnily enough, we have a small Nvidia problem at Vestact where we've almost got too much just because of its incredible returns. But having said that, I still think in terms of artificial intelligence, data hosting, and the potential that we are going to see going forward from the tech sector is huge. So I don't think you need to be or feel over-focused in that area. Yeah.
You're not going to give up any of your Nvidia anytime soon, are you?
I suppose it just depends on a client-by-client basis. If it's 40% of your portfolio, maybe it's prudent to start shaving a few shares and spread that around. But you can sell Nvidia and top up, Microsoft or Google or Apple. And like I said, you can stay in that realm. It's just, being too focused on one stock can be dangerous. Having said that, if a new client comes to us, we're still putting them in Nvidia. We still see good upside there. I don't think this big AI boom is anywhere close to the end, and very excited to see what else we can get from it.
Yesterday, chatting to Magnus Haystack, he said he wasn't giving up Tesla anytime soon, although we've got Cy Jacobs from 361 Asset Management and Walter Aylett from Aylett & Co. saying Tesla is way overvalued. Where do you stand on Tesla?
Well, I guess that's what makes a market and why it's so fun. You got lots of smart people with the exact opposite conclusion on something, especially something as polarizing as Tesla. And I guess, Elon Musk has not done himself any favors on the polarizing spectrum with his massive political rallying now, which, to be honest, as a shareholder, I'd prefer he avoided. But no, I'm still positive on Tesla. I think, it shouldn't really be valued as a car company. I think that huge upside is going to come from that self-driving technology. And once they crack that code, and I do believe they will, they've got 500,000 cars a quarter hitting the roads, giving them huge amounts of data. And I don't think anyone can really properly compete when it comes to proper self-driving technology with what Tesla have available to them. So I do believe they're going to be the first ones to crack that code and selling on that software, firstly to their existing fleet and then probably to other car manufacturers, and that has massive upside. And then it's self-driving taxis, and the world is their oyster after that. So I'm pretty excited about Tesla. But again, you've got to be cautious and not throw your entire life savings into the stock, but definitely got to place in the portfolio.
Do you pay attention to news flow out of China? There's a lot of concern that China is slowing down and that those numbers are going to disappoint from a GDP perspective. Not as much stimulus into the local government as people were initially expecting. And then the World Bank adding to the concern by putting in lower expected GDP numbers. Does it have bearing on your portfolio given the US centricity of your portfolio?
Of course. I mean, China is the second biggest country GDP-wise on the planet, and very important both as a South African and as a US investor. A lot of our stocks have massive exposure to China, Tesla being one of them, Apple, Nike, whether it's manufacturing there or selling to Chinese consumers. So it definitely is something important to watch. I do feel this latest stimulus-led rally doesn't quite feel like it's got the right foundations or fundamentals to be sustainable. That kind of market reaction to a government stimulus, I can't recall anything like that, seeing that ever. It just doesn't feel like it can last. Interestingly, a lot of investors or experts say, you've got to have some sort of Chinese exposure. But to be honest, especially coming from a South African perspective, where we already operate in quite a volatile regulatory environment, I really don't think it's necessary to put your hard-earned savings, in a jurisdiction where, the regulatory environment can be changed so quickly. And that's what we saw, during COVID and how the Chinese reacted to that. And a lot of South Africans have heavy exposure to Tencent through Naspers and how they have heavily regulated the gaming sector in China. So things like that is probably a good reason to avoid it directly, buying direct Chinese stocks. But again, there's a lot of South Africans through Naspers, through the commodity stocks, who will have indirect exposure to China.
And Byron, final question. As you said, you would prefer Elon Musk to stay away from the politics, but that election is looming ever closer. Is there credibility in the Trump trade, i.e. markets will rally if Trump is endorsed as the next president of the United States?
Jeez, I don't know. And if anyone tells you with authority, if they know who's going to win that election, I wouldn't trust them. And I wouldn't trust anyone who says with authority how the stock market's going to react. At least they're both known entities. When Trump won the election in 2015, that was a big shock. Whereas we've had a term with Trump and we've had a term with the Biden administration, and now, Harris probably sort of going along a similar path. So both are known entities. I have no idea how the market's going to react, but we invest in stocks that can handle Trumps, they can handle Democrats, they can handle all sorts of political turmoil, and we're happy to sort of ride through those waves. And the good thing about the US is, the general thesis and idea, whether it's Democrats or Republican, is it's still, very capitalistic, and they protect their businesses, and we still feel, that's the best place to put your hard-earned money, because, it celebrates innovation and business success.
Byron Lotter, thank you so much for joining us here on BizNews and sharing your views.